Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, December the 11th, the year 2017. Focus. You know, so much has been written about focus. And I'm not just talking about trading, I'm talking about life, about doing what's important. You know, having your attention focused, having your energies focused. In fact, I just read an email this morning and it talked about daily routines and how most of them are just a bunch of hooey. It made me laugh. But the issue was, or his main point was, that you pick one thing that's really important to you, like the most important thing to you, and you spend at least 15 minutes first thing in the morning doing that one thing. Because, you know, the fads of today, I guess, are minimalism, rituals / morning routines. I guess that falls under rituals. And I think life hacking. I think those are like the big fads. I might have missed some, but I just see so much about it, and a lot of times I'll laugh because I guess, you know, after you're an adult and you've been adult for a few years or a few decades, you've probably bought at least one vowel and have gotten at least one clue. But anyway, well, what does focus have to do with trading? It's real simple. There's so many people out there on forums that are flitting around like butterflies from system to system and indicator to indicator. In fact, I got an email and I answered it. And in the email, the trader said something to the effect that, he liked the buy zone and he was wondering why people don't talk about it more, and, you know, wondering what the latest updates are. I go, well, number one, people don't talk about it because it's boring. You know, nothing's changed for over a decade. But the only thing that changes are the instruments that you trade with it, because, you know, some instruments have come and gone. Some instruments no longer fit the criteria. But then he went on to say something about, and he might play around with a couple other strategies. Well, you see right there, that's the path to ruin. It's he's going to kill himself. He's going to ruin himself. He's not focused. You know, it's back to the old Bruce Lee. You know, I fear the man that practiced one kick 10,000 times. You know, not the man that tried 10,000 kicks one time. So let's move on to the charts. Now, focus. As you remember from yesterday's video, I think we had about 5 or 6 unfilled gaps. Well, now we only have one. You see, focus. Once again, some of the gaps, you know, were a little bit bigger than others, but by focusing on that one Sunday trade, you're able to profit, usually across the board. Sometimes it takes more than one day, one trading session, but if you hang in there, you see the result. And the thing about it is, let's look at the AUDJPY. We're looking at the weekly chart. You can see here it almost made it, but not quite. We had an open, it went down, now it went up. So trading price action, more likely than not, you only had 4 pips. So you might have just passed this trade up. But if we drop down, now let's look at the 1 hour. Okay, so we got the open, And you see here it almost got it, but just not quite. Let's see, the low is 0.169. So it didn't break through. It just touched it. So technically it really filled. Might have to look at the code. I think it had to bust it. And that's interesting. So I guess technically it did fill that gap. But you can see, you know, playing the price action, what you would have done. It should be obvious by this point. Let's put this back to weekly. Then if we look at the daily, you can see here, once again, if we focus just on the previous day's wick zones, the daily high and low, and this shows you the previous day's high, the previous day's low, previous day's high, previous day's lows down here. Okay, and you can see here it popped through the high, and you had a chance to make, what is that high? Oh, about 14 pips if you popped out at the top. But that's on the AUDJPY. Well, weren't we looking at the CAD though? Yeah, I think we're doing the CAD this week. So let's go back here and see, once again, focusing on one pair and trading that pair for at least the week, if not the month, if not the quarter, if not the year. Because the pair will give you opportunities. So you can see here so far we've got an inside bar, and we've got price in the wick zone, the lower wick zone of the previous session's candle. But you can see here it had broken out of that wick zone, and that would have been good for about 16 pips, crossing the previous day's open and going up. So focusing, we focus on a pair, we focus on a few horizontal lines, and that's it. And looking here, you can see across the board close open. You can see some of the big moves. You can see here we've got a couple of buy zone trades possibly, and the magenta here shows you that these are in the rat zones, the upper rat zone, lower rat zone, for playing the reversal. And this is just the range indicator. I'm not even sure why I put the range. Oh, I think I switched this. This used to be percent, and somebody was asking about range, or I think that's why this got on this chart. So you can see here these ranges. We've got some really nice ranges here. Where's euros? Just not much happening with the euro. Looks like the action is with the pound pairs and the New Zealand pairs. Something must have happened. Yeah, New Zealand pairs, definitely. Must have been some news on New Zealand. So if you're a news trader, you'll focus on the news, and that's what you'll trade. So you see it all gets back to focus. And here with the buy zone, once again, no trigger there, trigger, opportunity. Price didn't make a higher high, dropped out of that H1 wick zone. You could have exited there. People were asking about, when do you exit? Show something, you know. And then somebody asked a question about talking about profitability. You know, that's up to the trader. I mean, the turtle guy proved that. He got a bunch of traders. Some were more profitable than others. They're all using the same method. You know, they all had the same instructions. Perhaps some of the traders were more focused than others. They didn't miss opportunities. They didn't second guess. They weren't slow. They didn't delay, etc., etc. You see, so much of trading is spent waiting. You know, a lot of people get a little lax. And you see here we had a short trigger somewhere here and here. It came back. Maybe you popped out. Maybe you didn't. If you didn't, then maybe you stopped out here or here. because right here price is telling you to go long. And if this was your first trade, you took some heat, didn't quite hit the open, then it went back up, had an opportunity here, no new high, came back through, exit with the profit. So what is the profitability? I mean, some people may have taken the loss here. Maybe that wasn't enough. They weren't paying attention. Maybe they were using some other method to determine their exit strategy. They didn't have an exit playbook. You can check my exit playbook videos out if you want to know what that is. So there's just so many things. That's why you have to pick just a few things. And starting off, it's like juggling. I've said this before. You start juggling one ball at a time. So you start trading one instrument at a time, one method at a time. You know, basically, I think I show you about 4 or 5 methods, but if you really examine the methods, they're all horizontal line trades. They're pretty much the same. It's just where they are placed on the chart. I mean, some are centered around the open. You know, some are centered around the current day's high and low. Yeah, some are around the pivot. We've got the pivot there. Once again, some are around the previous day's points. The high, the close, the open, the midpoint, and the low. But they're horizontal line trades. We've got the wick zone. Once again, the previous days. High, open, low, low, and close. We've got simple sweet spot indicator trades every 10 pips or every 5 pips, however you want to set the indicator, every 50 or 25 or 100. It's however you want to set that indicator, so you can decide how you want to trade. So once again, the topic, focused. How do we focus? We'll focus on one pair for the week. We'll pick a method. Horizontal line trade. Which horizontal lines do you want to use? That's up to you. You can use today's, you can use yesterday's, you can use month, you can use week. You know, one of the things I like, the weekly open crossover. It seems to be pretty powerful because price has to range, and for the week it's going to range away from the weekly open, either to the upside, to the downside, and most likely it's going to be both. You don't see too many weekly candles where the open and the low or open and high are equal. It just, I don't know, maybe I should run a frequency distribution on that just for the heck of it. But I mean, just looking at the chart, there's wicks on the top and the bottom, so I think that's, you know, it should be pretty much self-evident, empirical in nature. And as you can see here, we've got a weekly open cross. Where is that? Right here, because it's the daily weekly. So you can see we've got the weekly open and or the buy zone trade that we can use. So usually on the first day of the week, it's a buy zone trade because we're right, the weekly open and daily open's the same. Then starting on the second day of the week through the end of the week, then usually the weekly open and daily open aren't the same, so you can trade that weekly open crossover. So fellow traders, I hope I've answered your questions. I hope I've explained myself well. If not, feel free to ask more questions. And as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.